Hi, I'm Nick Riley, and in this video we're going to have a look at limit orders. A limit order is an order that you would place in the market that you don't want to be executed outside a certain level. So let's say, as an example, we're looking at Hasbro, and you can see the current market is 34.63, 34.64. If we have a look at the graph on a 5-minute basis as well, you can also see that the trend for the day is downwards. Now, what can sometimes happen is as a stock makes a move, it can move very, very rapidly. So if you're looking to go, in this case, short as an example, then you would not want to be caught by clicking on market and then you try and hit the bid, and what then happens is that the market disappears beneath your feet. You end up with a lousy fill. So what we'd like to do is we'd like to execute a short trade here. However, we don't want to sell for less than 34.58. So here we're going to short sell 100 shares. We want to choose ARCA L for limit, and here we want to try and hit this bid here. So we're going to type 34.58. So that's our limit now. So if the market goes below, we will not sell the share for less than 34.58. So now if the market does immediately crash, and the first price we see here as we hit our short is 34.52, we will not sell at that price. So let's click short. We can see that we've executed a short trade, 100 shares at 34.58. Essentially, we're safeguarding ourselves from a poor fill. We're restricting or limited the amount we are prepared to receive for short selling this share. And if I go over to the account manager, you can see here we are now short 100 shares in Hasbro. You can see now that the stock has started to move down a little bit. If we had simply hit market and the price had fallen away from us, where we wanted to sell for 34.58, we may well have received 34.55. So we would worsen the situation in terms of a short sell. Going back to the tickets, we can now see we have short sell 100 Hasbro at 34.58. Now I'm going to leave this trade on for the moment. If we want to execute a long trade with a limit, i.e. we think a price is going up and we don't want to pay more than a specific price, what we would do is almost exactly the same. So let's now have a look at a different stock, JP Morgan, and you can see here it's trading at slightly, market's moving a little bit fast, so the price is given from the exchange is moving a little bit unevenly. So 38.19, 38.20 at the moment. In the graph, you can see that the trade's a little bit spiky as well, which will probably explain this price. But what we'll do is this time, let's say we want to buy 500 shares and we don't want to pay more than 38.20. So what we're going to do is we will put our price in and we will trade. That's the maximum we want to pay. So we are now going to click on the buy function. You can see now that the offer price has come down anyway. So let's actually say we don't want to pay more than 38.19 and we will buy here. So we're now executed a buy of 500 JP Morgan shares at 38.19. So we didn't pay any more than we wanted to pay, and we can see here we're long 500 JP Morgan shares at 38.19.